At BlueOrchard, we believe engagement is fundamental to impact investing, if not one of its most important components. By working closely with our portfolio companies, we promote stronger sustainability practices, strengthen governance, and ultimately maximize the impact our investments are there to achieve, reflecting the contribution we can give as an investor. Over the years, our engagement experience across our portfolios has identified a few key elements of how engagement works best in practice. First, engagement is defined and prioritized based on each fund's impact objectives, as well as BlueOrchard's priorities and experience in driving effective outcomes. Our engagements can be aimed at improving sustainability practices, such as governance, transparency, or climate risks, or at supporting specific impact objectives, for example, by strengthening or launching products focused on women or climate. Engagement is then embedded within the investment process, from due diligence to ongoing monitoring and dialogue with portfolio companies, where we set clear expectations really early on. Second, while our engagement approach follows the same structure and rigor across strategies, its implementation and our level of influence vary depending on the asset class and on our position as an investor. In private markets, engagement often begins during due diligence process, where we assess sustainability and impact practices and identify potential gaps. This can lead to commitments that are formalized in the contractual investment documents, such as loan agreements or side letters. In private equity, we typically have greater leverage, for example, through board participation and close dialogue with management teams. In listed markets, engagement typically takes the form of a structured dialogue with issuers, where we seek to improve transparency, sustainability practices, and disclosure over time. Now, third, engagement is rarely a one-off interaction. Meaningful change takes time and often requires repeated dialogue and follow-up. In practice, we engage several times with the same institution as we track progress on specific actions and follow up on commitments we have previously agreed. For example, through regular calls with structured reviews to assess the implementation and discuss next steps. Finally, our experience shows that our influence should not be underestimated. Even in cases with lower leverage, targeted engagements can drive meaningful change through constructive dialogue with our portfolio companies. And this contribution to impact is what differentiates us as impact investors.
To illustrate how engagement works in practice, let us look at our collaboration with Hamkorbank in Uzbekistan. During our initial ESG assessment, we identified an opportunity to further strengthen the bank's approach to managing environmental and social risks. At the time, the method used to classify risks was mainly based on sector categories and the size of operations. But as a result, a large share of the portfolio was classified as low risk, even though some activities could potentially be considered higher risk. Through an open and constructive dialogue, we work closely with Hamkorbank to enhance this approach and better align it with international standards. Together, we identified ways to improve how risks are classified, helping ensure that environmental and social impacts are more accurately understood and managed. Hamkorbank showed a strong commitment to improvement by accepting our recommendations. This included reclassifying certain activities to reflect a more balanced and forward-looking view of risk, even in areas where the bank currently has no exposure. With the support of partners such as FMO, these improvements have been formalized in the bank's environmental and social action plan. As part of this plan, Hamkorbank has committed to a comprehensive review of its risk classification system by 2026, including a full reassessment of its portfolio. All of this will further strengthen the bank's ability to identify and manage environmental and social risks, supporting responsible and sustainable growth. This example really shows how engagement, built on partnership and ongoing dialogue, can help institutions continue to improve and deliver meaningful impact over time.